We're back and it's time for Ask Annex. As always, got a question for us. You head to the website, annexwealth.com. You look for the Ask button, and if we can help, and I know we can, you just click the Get Started button. I'm Danny Clayton. Fred Coleman, CFP, Wealth Manager, is here. Hey, Fred.
Hey, Danny.
And we got Matt Morzy, Director of Research and CFP at Annex Wealth Management, part of the investment team.
Hey, Danny.
Good to have you here. First question. It's a big one. I'm 65, retiring at the end of the month. I'm in IT, manage a system that no one else knows how to manage. On top of that, we're shutting down one of our data centers, so the application will need to be rebuilt from the ground up. I've tried to do the same knowledge transfers with others, but that's not going so well. I applied for and received a letter that I'm approved for Social Security. Work has asked that I continue in a consultant capacity for another 5 to 6 months, about 10 to 20 hours a week, hourly pay, no benefits. How would this affect my Social Security? I read I'd lose $1 in Social Security benefits for every $2 I make. Is that true? Is there a cap per year I can make? I'm very much caught off guard by the offer amount with no benefits. I'm a lot cheaper than was salaried, right?
First off, congrats on the partial retirement. I think it's pretty cool that you're getting called back. That shows your level of expertise when it comes to the work that you put in throughout your career. Because you're under the full retirement age, there is a limit that you can earn before there starts to be a penalty for your Social Security. So that number is $22,320. So anything that you earn under that, you still get the full Social Security benefit. If you earn more than that amount, then the Social Security Administration deducts $1 for every $2 that you earn. Now, let's say that the company, wants you to work even more than that 5 to 6 months, which is possible. I've seen these situations. Once you hit full retirement age, then you can earn any amount of money that you want, and the Social Security Administration won't reduce your benefits.
Yeah, but he's 65, so full retirement is what, 67?
Yeah, for most people, 67.
Yeah,
so if they convince them to work another 2 years, then earnings can be unlimited.
I think these situations can get so complex, and they're really going to have to monitor how much they are working and what that income level is. And again, I like coming on these episodes and going through, how important it is to sit down with somebody, because you really get in the details here. And Social Security planning is something we do so well, and our financial planning team can really hop into those really unique situations. There's a million different variables in Social Security anyways, even if you're not working part-time and trying to do that as well too. So really sitting down with a professional and knowing exactly what you can and can't do and how much that's going to impact you, because you certainly don't want to get into a spot where you're essentially working for free, or your income is being reduced enough where your pay is getting even lower, and you already think that what you're going to get paid is probably not as much as you're probably worth. So that get reduced even further, and it might not be worth it.
You should be an agent. You'd be a very good agent, don't you think? Okay, the next question involves SPY, and SPY is?
It's an ETF that tracks the S&P 500. It's one of the oldest ETFs that's out there, and one of the biggest.
All right, here's the question. I admit I'm quite confused about why SPY has rallied so hard. I guess my question is, do you think the rally's real and SPY will go back to all-time highs, or is this a fake out?
Yeah, that's a great question. I would certainly, putting my agent hat back on, you should listen to our SWOT podcast and really, really get into those, because that's where we really can get into a lot of the details of what's going well with the markets, what's not, what are some threats that are out there, and the opportunities that we see as well too. So for a really in-depth analysis, I would send you in that direction. But from our standpoint here, one thing to keep in mind is, we really haven't been that far away from all-time highs. We did have a pullback not that long ago, but really only went down like 5 or 6% or so. It really is not that much. And that's really natural and happens frequently throughout the year. So we've really have stayed kind of at these levels. And also that, markets like the S&P are forward-looking mechanisms. So they're looking 6 months, 9 months, 12 months out from an investment standpoint. So people are trading that ETF or investing. That's really what they're looking for in terms of what corporate earnings are, which have been pretty healthy and actually above estimates that we've seen lately. When we're looking at stuff that's happening in the economy, we have not been seeing, huge weaknesses that are big red flags that would say we're due for a really big pullback or anything like that. Now, things aren't all perfect. Rates are really high. The Fed's not cutting like everybody thought they were going to be, or a lot of people thought they were going to be last fall, which prompted a really big rally in the market. But things are in a spot right now where you kind of have a little bit of that Goldilocks feel to it, where people are optimistic, but they're also a little nervous, which is kind of a good environment for the market because it's not going to go crazy, but it's also, you don't see the risk of like that 10, maybe even 20% pullback just on how emotions are at this point.
Optimistic but slightly nervous. That's the way my life is.
Oh yeah, oh yeah.
What do you think? Let's see if we can squeeze this one in. My wife got a wire into her bank account of almost $4,000. Wasn't expecting it. The wire does not have any info about what it is or where it came from. She called the bank, asked for more info. They said they didn't have any info. The alarm going off for you guys?
Oh yeah, and that's the tone you usually get when you call a bank. But I would just say make sure you don't spend the money. I would also, in addition to calling the bank, write a letter to the bank so you have some type of documentation. And lastly, the last thing to think about is if you do feel like your account has been compromised, then you may want to consider changing your bank.
I would add on to that, this is a monopoly where there's that bank error in your favor, collect $75. This is not that same situation. This is not a benefit or a perk. And so I would really be cautious on anything. I would also be watching, to the last point that you made, every item that's going in and out to make sure that it is you and that's not, money's not coming out of your bank account that you're not expecting as well too, where it could be potentially compromised. And writing a letter, sending an email, having that documentation. I'd be calling them pretty consistently too and keeping track of every time I called them, who I spoke with, because if you end up spending that money or taking that money out and somebody figures out, hey, I'm short a couple grand, they're going to come back after you in that money. And there's a lot of times, if you just Google this really quickly, you're going to see a lot of stories of people who had money come in their bank accounts, they spent it, and that money's gone, but they owe it back. It's not their money. So
you're telling me Finders Keepers is gone?
I remember that growing up. That's a pretty popular saying, but that does not hold true in this situation.
Bummer. Matt Morzy, Director of Research and a CFP Annex Wealth Management. Thanks.
Thanks, Danny.
Fred Coleman, CFP and a Wealth Manager at Annex. Thank you.
Thanks, Danny.